What's up everyone, it's Brad with the Hodl fandom. Given the state of the markets, I thought it's important to revisit part of my OMI pricing model. Just one aspect of it, to show you a scenario illustrating that if you're a long-term holder, this is kind of a scenario that we want, where buybacks have not yet started and markets are kind of tanking. This sounds kind of weird and I'll explain what I mean in today's video. Let's get into it. First and foremost, thoughts and prayers out to those in Ukraine right now. For anyone that's there, I hope you're safe and I hope you stay safe. I'm not a geopolitical expert, so I'm not going to go into all that, but whenever there's loss of lives, that's pretty horrible. And it's above and beyond anything that's NFT, crypto, or investment related. So my heart goes out to anyone that's affected, and I just hope for a quick resolution. Now, I can only talk about what I know. And with all that turmoil in the world, the stock and crypto markets have been hit pretty hard. Pretty much everything is in the red. So I'm going to pull up my OMI pricing model here, which I built months ago and I still need to rebuild it. But I just want to show you guys something. As I was building it and testing out different scenarios, one of the things I always try to do, even when I build macros and models for other people, in my day job, I tell them try to break it. Try to find scenarios that will break it. Now, I found this scenario where you pump all the positive factors to their max and you combine that with a crypto market crash, and I put a secret message here. It's always been in the model. You can go back to October or November, whenever I built it. But ignore the prices here because in this scenario, which in the model is an extreme scenario, the point I'm trying to get at is when there's lag to catch up with buybacks, where we have Ecomi in full swing, and there is a full market crash, we basically can burn all of the supply. Now, I need to enforce that that specific scenario is highly unlikely, but this leads to the point I'm trying to get at. We kind of have a mini version of that with buybacks not yet started, combined with the low price we have today. I want to show you visually what this can look like from an OMI price perspective. Now, this might look really bad in the short term, but for long-term holders, this is kind of crazy good. So my model has so many variables tied together. The macro crypto markets, exchanges, marketing, buybacks, Veveverse, gamification, licenses, and burn. Now I tied those all together, but I'm not going to go through all that. Again, I need to rebuild the model given all the crazy and great information that we've had since then. I'm only going to focus on one thing, and that's just the burns today. First, let's break down the revenue. David, how much are we making this year?
And we will be generating over $1 billion revenue in the calendar year coming.
$1 billion. Okay, let's see what this means. Of the known revenue streams, 100% of primary market sales, 2.5% of secondary market sales, possibly Master Collector Program subscription, a premium subscription that is, and Veveverse land sales. Now, that's all I could think of right now. Now, the last two are unknowns, and I'd say unlikely for 2022, so let's take those out. So then we have $1 billion that can be broken down between primary and secondary market sales. Now let's guesstimate that percentage share between the two. So special thanks to Puddin' Sheiks, who is an awesome mod on Discord and a real selfless community member who tracks the historical OMI burns. Now let's leverage his spreadsheet and guesstimate a potential revenue split. I'm going to go to mid-year last year to get some percentages because it's kind of cleaner and I just have less to calculate here. Now the dollars are less relevant versus today, but I just want a percentage. So this still should remain directionally correct. The first two columns here are from Puddin, and I add in the OMI price, my calc for the burn in USD, the drops, and then we can calculate the primary market sales from the drop info, as well as the secondary market revenue that they receive, which is 2.5% of the remaining non-drop dollars. We then total that up, and primary market sales revenue is a massive portion at 97.5%. So moving forward, let's just go with that. Now going back to my quick calculation here, let's be conservative and round down to say 90% or 900 million in primary market sales. So the first thing I always do is a reasonability test, especially with an eye-popping number like that. Does it 900 million make sense? Let's look at this past week of revenue. 4.6 million in primary market sale revenue this past week. So straight line annualized is 240 million, which is just under 4x of the 900 million. The thing is, growth will not be straight line. We gained 400,000 users in January, and we could double the user base by mid-year. Combined with the fact that it's been continually stated there will be multiple drops a day at some point, yes, the 900 million does make sense to me. So it passes the reasonability test. Let's move on. Since we also know 100% of primary market sales equivalent of OMI are burned at the current price today, which I'm filming on Thursday, this video will get out on Friday probably, that would burn 225 billion tokens. Combine that with the tokens already burned, we would burn 95% of this circulating supply. 95%. There are assumptions here. The price remains low, continued sellouts, revenue targets are met, and the most controversial one, buybacks do not start. Of all the factors, I don't think the price will remain super low given all the great catalysts on the horizon, but who knows? Last week I didn't think we'd be on the brink of World War III. But regarding the buybacks, why don't we want the buybacks to start? Well, once they're initiated, there's kind of this balancing act with the inverse relationship between burn amount and token price. All else being equal, the buybacks increase the price, but then the higher the price, the lower the subsequent buybacks are. So let's quickly look at an example here to illustrate what I'm talking about. If they do buybacks monthly, you can see a steady increase in price. That results in burns decreasing. Again, that's with everything else remaining constant. For the short term, yeah, it sucks because people want that utility. But if you zoom out and you look at the numbers, this scenario with a suppressed price and holding off buybacks, in the long term, that will lead to much bigger profits. So let's finish off this little scenario here. If OMI and crypto tank for the year and we burn 95% of the circulating supply, the implied price is 10 cents. Assuming, this is a big assumption here, buybacks catch up at the end of the year or start of the next year. At 10 cents, we will shatter the all-time high of 1.3 cents? Now, this is without marketing from Rogers & Cohen, no exchanges, and with volume of 10 million daily, which is ridiculously low. No Veveverse, no gamification, a ton of licenses still not announced, without OMI to NFT, and with crypto and stocks doing bearish things. At the current price, burns alone will destroy the all-time high. Again, I don't think it can stay this low with so many catalysts on the horizon, but with fear in the markets, OMI holders have a unique advantage over everyone. I'd like you folks to name me one other crypto project that can have this positive effect at the worst of times. Most crypto projects are just selling promises, so let me even expand that to the stock market. Name me one investment that has this unique advantage in this unique scenario that can take advantage of difficult market conditions. In my mind, there isn't any other. Ecomi is unique, and I feel extremely lucky to be a part of it. Now, I don't think I've ever gone into specific predictions. I prefer to model out different scenarios, but I do have one here. It's not price prediction related, so you might be disappointed. But I will say this. These tokenomics with this unique burn and buyback system will be so successful in reducing circulating supply that during the next crypto bull run, most of the new meme coins that pop up will copy it. History doesn't repeat, but it often rhymes. In 2014, we saw Bitcoin's success, and all the new crypto projects named themselves Bit something or something coin. After they saw Doge's success, animal-themed cryptos popped up with quadrillions of supply to mimic the low price. During SafeMoon's success last year, their tokenomics were copied to a ton of other meme coins with that 10% redistribution fee. I believe Ecomi's buyback and burn system will be so successful that it will be copied and tied to the sales of future meme coin products. If and when that does happen, please use your critical thinking to truly determine if that product will actually sell out. So anyways, my final thought here, the success of this project will be proven in the long term. And if you're holding long term, then you don't need to be worried about short-term volatility. Thanks so much for watching. Please consider liking, subscribing, and following. And I'll see you in the next video.